welcome to Deal Flow, the show where we keep you informed about the latest merger and acquisition trends by looking into the minds of investment bankers, financiers and CEOs on the buying trail. In this episode, we're looking at deal making in the African region. Mergers and acquisitions have become an important channel for buying exposure to the African growth story. This is true both for regional buyers and for global investors. So some good analysis coming up. Before we get into that, let's take a quick look at the deals of the week. Three of Greece's major banks submitted bids to acquire New Hellenic Postbank ahead of the deadline for its sale out of the Greek bank rescue fund. The New Hellenic Postbank has assets of 13.7 billion euros and a network of about 200 branches. Malaysia's Petronas is in talks to sell 10% of its Canadian shale gas assets to Indian Oil Corp. This mirrors a deal it signed earlier this year with a Japanese company. China's e-commerce giant Alibaba Group Holding will use proceeds from its potential listing to fund acquisitions. This as the firm looks to broaden its mobile services. The attractiveness of the African continent for M&A deals is underpinned by lively economic growth and the buoyant energy, mining and utilities sectors. There's also a massive consumer market busy coming into its own. In studio with me to discuss inter-Africa deal flow is Peter Stein, a director at Werksmans Attorneys. Peter, welcome. Lovely to have you here. We keep hearing all this talk about Africa and the excitement and the growth on the continent. Every week there's another conference on this aspect. Now, are we yet seeing the translation of this activity and this optimism about Africa? Are we seeing that translating into deal flow?
I think definitely so. I mean, African growth rates are actually the story of the 21st century. There's tremendous growth opportunities, and that's not just trade, because I think it's important to distinguish trade from deals or M&A. If foreign direct investment or FDI is definitely increasing as well. And the very interesting new trend is intra-African FDI, i.e. investments by not just South Africa, but other African countries, notably Nigeria and Kenya as well, where private sector firms are getting involved in doing cross-border transactions in Africa.
How big is that intra-African deal-making compared with the total scope of things?
I think if you look at the total scope, the estimates are it's about 5%. So it's still relatively small, but it's growing.
Yes.
And the trends and the statistics show that it is growing.
And this presumably reflects the strengthening regional integrations, the nodes in East Africa, the nodes in West Africa, Southern Africa.
Absolutely. I think the moves towards greater harmonization, and particularly the free trade areas, are tremendously positive developments. There's still a lot of work to go, but I think, SADC, COMESA, they're leading the way.
So, Peter, that also suggests that the intra-African deal flow that we're seeing, these are trade buyers, so a corporate needing to expand into an adjacent market in a neighboring country rather than investment buyers or financial buyers.
But I think one has to really distinguish between the so-called greenfields projects and then buying existing businesses. The greenfields projects are like the big mining and infrastructure projects. I mean, those are very capital intensive. I think from the inter-African perspective, you see more focus on services, particularly financial services, as well as manufacturing and consumer industries.
So less and less of the mining, or you're still seeing the mining, but you're seeing the supporting industries coming alongside the mining and resources.
I think the growth, the cliche, the growth of the African middle class is actually quite an important development. Although how you define the middle class is quite an interesting debate in itself. Because I think sometimes they say if you've got between $5 and $20 disposable income a day, you're middle class.
Yes.
But the growth of the consumer business is actually the great story. Mining and resources are traditional African investment opportunities.
Peter, deal size, from my understanding is the story is that the deals that are available in the African region are on the mid-size. So to some extent, outside buyers, US, European, etc., coming into the market might look long and hard and have difficulty finding the deal sizes to which they are accustomed.
I think it does vary. I mean, there are large deals, but I think the focus is more on private equity as opposed to listed entities, because in Africa the stock exchanges are not that well developed and not that well capitalized. I mean, it's interesting that a country like Nigeria, their stock exchange, they're a massive energy producer. You can't really get energy stocks on the Nigerian stock exchange. So I think there's still these developmental challenges, but the opportunities are there, and that's why the world's looking at Africa.
Indeed, in the last week or so, we had Mark Mobius making that very same comment, that in order to buy exposure to Africa, private equity is the route to go. So you seem to agree with that point.
Absolutely, definitely.
So we've spoken to some extent about sectors, so regions, if we could elaborate on that. So what are the hotspots? So we know South Africa presumably dominates M&A activity over the continent, so Nigeria would be second.
Nigeria and Kenya are really the nodes of, their business sectors have been very active. In Kenya, of course, they've got the East African Community, which is quite far along the way towards developing a common market for East Africa. And I think that common market, that free trade area, I mean, creates a great deal of interest for foreign investors as well. Because, I mean, look at South Africa, 50 million people. SADC is 400 million. It's a huge market. If you make it more interesting for investors, both foreign and, I must say, local as well,
yes,
that's the way to go to develop the continent.
We bring into the conversation now from our Nairobi bureau, Sheila Gill. She's a director and head of transactions and restructuring at KPMG Kenya. So Sheila, you might have heard what Peter said about the activity and a great deal of intra-African deal flow that we've seen. So from your practice in East Africa, are you also seeing on the ground evidence of that?
Yes, it's happening now. We are seeing an enormous amount of interest in the East Africa region. We have almost 5 new investors coming into the market every week that come and want to talk to me, and they're very much looking to do deals in this area.
Sheel, so from what Peter said, so there'd be trade buyers. To what extent are you seeing financial buyers, so investors, whether it's into so asset managers or pension funds or development finance institutions looking at possible deals?
So I've seen 3 types of investors, and literally I think they fall in 3 equal buckets. We've got the local investors who want to have a Pan-African strategy. They want to move out of, they want to expand the business out of Eastern Africa into Sub-Sahara areas. Then you've got the financial investors, both of which we're getting local and international investors coming in very heavy. I mean, some of them are fundraising just for Africa funds. And then you've got the strategic buyers as well, coming from global strategic buyers. I would actually put the equal buckets, or if you like, equal level of interest on all 3 of those fronts.
Peter, this touches on a theme that I've seen emerging, that Africans doing it for themselves. So many of these financial buyers now coming from within the African region. So we know we've got the powerful pension funds in South Africa, Namibia, Botswana and elsewhere. What other such investors are we seeing?
Well, I think one must always remember the African Development Bank, which is now issuing bonds, developing bonds, which is a very exciting development. You also have the development increasingly in African countries having their own sovereign wealth funds. I mean, Angola's just announced one for, I think, for $5 billion. Nigeria's got one for $1 billion. And interestingly, Algeria has one for $77 billion. And I think they could play a huge role. And I think the African Development Bank is playing a key role in also trying to coordinate African governments and their sovereign wealth funds to coordinate development in Africa.
So Sheel, with all of this capital, whether it's trade buyers or financial buyers, looking at the region, there's been talk about pricing and possibly this capital driving up prices. Is that in fact something that you're seeing, or is pricing still attractive?
So actually we have to say that we are in the early stages. And the reason I say that is because a lot of our local targets, if you like, subject to transactions, need a long education process to convince them that there's a deal out there. Therefore, we are not seeing the level of competition that would increase that value. However, we are seeing a keen interest from local companies to do deals. But it will take a bit of time for that competition to kick in.
Peter, related to that, the kind of deal financing and deal structuring that we're seeing in Africa, and again, we're always being warned to not generalize about the continent. Every country, every region, every node is different. Is the kind of deal structuring different here from what you're seeing in developed markets or even in South Africa?
I think the same issues apply. I mean, there's tax structuring, there's exchange control, they're taking advantage of incentives, there is infrastructural issues from the practical to the legal. I think in Africa the key challenges are issues of infrastructure, governance, and fundamentally I think, you know, certainty of regulation. I think both local, and I must say both local and foreign business want certainty as to what is the legal environment, what is the regulatory environment. Yes. They don't want changes happening without fair warning. And I think that's a major challenge.
Yes. Sheel, on a scale of 1 to 10, how would you rate the relative attractiveness of doing business, the certainty, the regulatory support that we're seeing for doing business, deal making in East and West Africa?
I would give that rating of 7. The regulatory environment here, especially in Kenya, has extremely improved since the election and the peaceful election we've had. We've got a new government in place, which are essentially commercial people who have proven themselves in the commercial world. So there's a lot of hope here that we will, you know, we're making strides. You know, today we know there's a bill going to pass in September that's going to increase the capital requirements for banks and insurance companies, and that's going to bring consolidation in the sector. So it's moving in the right direction.
Peter, in the last decade or so, we've seen deal flow in the African region going up by multiples of 10, of 100 in fact. So if you were to take today as a starting point, over the next 5 years, what sort of growth are you expecting in deal flow?
If you take my crystal ball, lawyers aren't good with crystal balls, but I certainly think that given the past progress, there's nothing that indicates that past achievements aren't going to continue in the future.
So this is structural and cyclical growth. This is catch-up growth we're seeing in Africa. The deal flow simply has to follow, assuming that there's a supportive regulatory, legal, government environment.
Absolutely. I think the growth, particularly of the so-called African middle class, is a huge consumer market that is burgeoning, and that has caused a lot of interest, not just the traditional sectors like mining, gas, energy.
Sheel, last comments from you, just on the prospects for deal flow, for investment activity in the African region.
So, basically, I have some statistics. We had 340 deals in the last 1 year in East Africa. So I think, and you know, our deals go from anything from $0.2 million to $25 million up. And I just think that there's going to be a huge increase in those numbers going forward.
Sheel, thank you. And Pieter, good to talk to you. Peter Stein is a director at Werksmans Attorneys, and from our Nairobi bureau, Sheila Gill, director and head of transactions and restructuring at KPMG in Kenya. Thank you for watching Deal Flow. That's it for us this week. See you next week, Monday.